we are living in an unprecedented time right now. I mean, and I think like we say that every couple of months or every couple of weeks, right? And again, like from seeing like what happened in 2008 to this global pandemic in 2020 that we haven't seen before initially, right? Like, and everyone needed to stay at home. And with all the changes, what happens that make the perfect storm to create the situation where we're now, unfortunately, which is a hyperinflation. And now like the Feds are trying to intervene to manage that.
This is your daily real estate syndication show. I'm your host, Whitney Sewell. Well, today our guest, they have go through all the work to become a physician, right? And then they figure out, hey, I need my time back. I need more time. And we need more passive income often to make that happen. And they figure out multifamily syndication is often a way to do just that. His name is Harry Nima-Zegarra. He's a full-time doctor, multifamily syndicator, active in real estate for the last 5 years, currently GP in over 1,000 units in 4 different states. He also owns and manages single-family homes in Dallas-Fort Worth area. His wife is also a physician. They have 2 boys. They love to travel, sports, and being outdoors. You're going to hear Harry talk about numerous things today, from active versus passive, but also what he expects for what's happening next for multifamily and inflation. And then just even he goes into REITs versus syndication. I often get questions about that from passive investors, like why wouldn't I just go invest in a REIT, versus a syndication or vice versa? And so I know you're going to learn a lot from Harry today. Harry, welcome to the show. It seems I interview lots of people, of course, as the listeners know, but often I interview people who are a doctor and they figure out a way to increase their income or a passive income, and they find multifamily seems to be a great way to do that. And potentially it's what has happened to you as you learned about real estate. But give the listeners a little more about who you are, Harry, and let's dive into how you got into this thing we call multifamily syndication.
Yes. First, thank you so much for having me on your show. It's a pleasure and it's an honor too. So yeah, I mean, my name is Harry. My wife, Mitzi, and I, we're both from South America, from Peru. We actually came here to the US about 15 years ago. We both are physicians. So we came here to continue our training. So again, that was 15 years ago. So we were doing, because of the nature of medicine and training, we were doing the residency, fellowship, subspecialization, and we were moving quite often, every 2 or 3 years. So we have been in Pennsylvania, Virginia. Then when we finished, we went to South Texas. We were there for 2 years, actually in private practice. And then we moved here to Dallas, where we had friends. And my wife also, she had family. So it was a great decision to move here. And since we came here, we love the area, right? So our kids went to school and they also love their friends, their school. So it was an easy decision to stay in the area, right? And in terms of real estate, so we also have a little bit of a background of real estate from back of our country, right? So in my family, so most of my family, they were not able, or they didn't have the opportunity to go to college. So we are actually first generation of people to go to college. So they were doing business and other things like that, including real estate. As you can imagine, I mean, it's very different, doing real estate in a developing country to here in the US, but we were very interested already. So, and the reason why we didn't start until just 5 years ago was because, again, we were moving very often. So it was kind of difficult in that way. So yeah, so we came here to Dallas, and after a couple of months, I was telling you, we decided to stay. So we bought our primary residence, and 2-3 months after that, we started getting very involved in real estate, initially in residential real estate. And in the last 2 years, we have been doing commercial real estate, specifically in apartment complexes and in syndications.
Nice. Well, why not just stay passive? Maybe active versus passive. I mean, why, especially as a physician, why not just be a physician and just keep investing passively with different operators and deals and asset classes or whatever, increasing your passive income that way? Why become active?
Yeah. So initially, probably because of lack of education, right? So you come here and I was doing a lot of audiobooks and podcasts, initially on how to invest in real estate. And the first way you learn how to do that is through residential real estate, specifically to single family homes, right? So you can do flips, you can do long-term rental, short-term rental. So that's how we started initially. I didn't know better. We came to Dallas and we started buying single family homes. We were doing well. Actually, we grew quite a lot. We went up to 9 properties at some point. I mean, of course, you can imagine as a full-time doctors, we needed to some help because of that. So we decided to hire a property manager. But at some point, as you're saying, it was getting too busy. And also we have two kids, two sons. One is 7, one is 11 years old. You can imagine like having two boys at home is also very busy and fun, but busy. So we decided to pivot to commercial real estate, where again, like we are doing active investment, but also we're investing passively in this. And again, like, so I'm doing in this moment actively, like, because I still have the time, have the strength, have the passion for real estate too. I'd really like to be involved. But I think at some point, that's our goal. And I believe that's also a goal for most active investors, to become only passive investors, right? Like, because you need to value like your time and you need to find balance in your life, right? Like, I mean, you need to find this time like to do things that you like with people that you love, right? I mean, at some point, for sure, we're planning like to transition fully to passive investing.
Yeah, I've been so impressed, just the multifamily industry and the business, and how so many people, I mean, just can create wealth, right, through multifamily syndication, and whether they're active or passive. And so what do you see, Harry, is next for just multifamily, inflation, and just our economy?
Yes. So we are living in an unprecedented time right now. I mean, and I think like we say that every couple of months or every couple of weeks, right? From again, like from seeing like what happened in 2008 to this global pandemic in 2020 that we haven't seen before initially, right? Like, and everyone needed to stay at home. And with all the changes, what happens that make the perfect storm to create the situation where we're now, unfortunately, which is a hyperinflation. And now like the Feds are trying to intervene to manage that, right? Like, so why that happened? So like in Paris, because again, we were at home, we were not spending that much money. We were still, so most of people, I mean, not in my case, because I was still going to the hospital, but so most of people were still receiving their income or checks. The government has printed money at incredible pace in the last 2 years. I think I heard somewhere like 40% of currency has been printed in the last 2 years, which is unbelievable. And also like the supply chain problems, all that together make perfect storm to create the situation where we're on, right? Like, it hasn't been like this in the last 40 years where we had this kind of inflation. Then it comes the Feds, and we initially think they have many tools or many ways how to handle this. Turns out that it's just like one way, right? To going up or to go down on the rates. And that's what they have been doing, right? Like, and they have been doing at a very, very fast pace. So I guess I've been like in different meetups and some conferences, and I always listen from experts. If there's one thing that is common in all these experts, is that we don't know what's going to happen next. So we kind of think what's going to happen, and we can see the past and we can look ahead in the future, right? But we really don't know what's going to happen, right? So what we think is that, again, like, they're going to continue raising these interest rates because we don't have still inflation under control. But at some point, that's going to affect the economy too, right? And there are some type of businesses that are going to be in problems, even like the regular people. So when that happens, what are going to do? They're going to change rates again. And they're going to start going down on those. In multifamily and in real estate in general, I mean, we are not detached from the world, for sure. I believe it's also going to affect real estate and also the multifamily business in some degree. But there are some fundamentals that I believe put us in a better position. You always hear about the deficit in housing or units that we have across the country, especially in the Midwest and the Southeast, where all the population is going, where all the businesses are going. These states where are like business friendly and landlord friendly. So I think like in general, the real estate and multifamily also may suffer a little bit in the next year or two. Even nowadays, you are seeing deals are difficult to be structured right now. We see cash flow suffer or delay like in the first couple of months or year. But I think we're well positioned for the next 5-10 years still.
You mentioned multifamily may suffer in the next year or two. You mentioned a little bit about maybe cash flow in the first few months. Any other ways you see multifamily suffering, or maybe certain deals over other deals suffering because of what's happening in the economy?
Yeah, so because of what happened last year, a lot of the success of a syndication depends also on the asset management teams, right? And we have seen, because of these supply changes problems, there are some deals or projects where the renovations are delayed. They may not be able to reach their pro forma rents or income. And also at some point in the last 3, 4, 5 years, everyone was doing bridge loans, right? So which means that we need to do a refinance in the next 2 or 3 years. They may be facing some problems and some challenges too at that time, right? Because if cap rates start going up very quickly, or if the lender needs more equity to be held, so they're going to be in problems.
Yeah, no doubt. That's why, bridge debt, you got to be careful or use it sparingly, maybe, or there are times to use it, no doubt about it. But however, you got to think about that term when you got to refi and you don't know what's really going to be happening 3 years from now or 2 years from now
Yes.
or 5 years from now, right? So I hope you have a backup plan, to say the least. And you mentioned back to the asset management team, the operator, and so it's so important, no doubt about it. What about some other benefits that you see, investing alongside a syndicator or, operator as a passive investor?
Yes, yes. So this is something that I see in general, like in real estate, but especially in multifamily. When you invest passively, you can leverage people. You have a syndicator who has all the experience, who has the time, that has gone through different cycles and has the expertise. So you leverage people and they work for you, basically. So you have also diversification. You don't necessarily need to invest in your backyard. I mean, I live in Dallas and all my single family houses are in Dallas. But I mean, when I invest passively in multifamily, I have some properties that are in Jacksonville or in Waco. Now we're raising for one in Arizona. So you have that benefit, diversification. It's important also to mention that when you are doing it by yourself, all the decisions, all the responsibilities and the liabilities are on you. So that's very important. And again, like you may like and you may have a passion for real estate, but not everyone has that. And also at the same time, not everyone has enough time to do that. So you're putting, all that important on the syndicator, which is great. Having said all of that, still you need to do your due diligence because there are syndicators and syndicators. As great as passive investment is, you still need to do some work. So you need to do some vetting of your sponsor, like initially. And after you have defined that it's a good sponsor that aligns with your values and you like the project and the area where they're investing. So you go ahead and you sign and you commit and you send your funds. And after that, that's passive. So that's a great thing.
Yeah. No doubt. You have to think about it, just like you were talking about earlier, active versus passive. And definitely many benefits to being passive, but it does go a lot to who that operator is and figuring out that team, right? But what about how have you seen, maybe as an operator or even as a passive investor, just being able to reduce the risks involved in a multifamily deal or investment?
Yeah, it takes a lot and it takes a team, right, to do that. So one of the things that we do is we invest in growing markets, right? I was just telling you about the markets we invest in the Midwest, Southeast, Texas, and Arizona, where we see that the population is moving, where we see there's businesses that are moving, business and landlord friendly. We also, and myself also, I focus a lot on the asset management team because again, like that's super, super important for a deal to go great or to go wrong. I usually focus on someone who has been for years, who is doing this full time, right? And who is also, again, who is able to visit the property very often. Even if the person lives in the area, it's even better. We understand that we don't need to live in the same area, but at least if they, for the first couple of months, are the crucial months, they're able to visit the property often. That's very important for us. And then later, again, the last part is the underwriting. We always talk about conservative underwriting and what that means, right? I would say it also is conservative and also realistic underwriting. We see how the cap rates are in the last probably 5 years. Everyone was able to get a property and get great returns from their investors. Maybe even not necessarily doing that much. Even you have seen during the pandemic, many of the properties, they didn't undergo any renovations or great things on the business plan, but it's still because of the inflation, everything went up and they were able to sell with good returns. So we see those things in the underwriting, right? Like things like the cap rate, economic vacancy, how is the rent grow? We have seen amazing rent growth that may not happen in the next couple of years, things that are very important to look when you're reviewing a deal.
No doubt. No, some very good points. What about, as you were considering, passive versus active, did you consider REITs at all?
Yeah, REITs, you have to love them, right? Yeah, they're a good way to, I guess there's also another way to invest in real estate. However, we haven't been exposed that much, and in Nima Equity, we don't invest in that, just mainly because this is kind of some degree similar as the stock market, mutual funds on Wall Street, right? So you invest in something and again, you don't necessarily know who is the operator.
Yeah, maybe you can speak to more of the differences between a REIT and a syndication, just so the listener, in case they're not familiar with the REIT.
Yes. The REITs are real estate investment trusts that work similarly as stocks that anyone can buy, really. The syndications are more kind of not that available to many people, and actually it's more difficult to find them. You need to know the operator from before, or some of them now are advertised as a 506C. So one difference is, for example, the number of properties. In syndications, there's usually 1 or 2 properties, and you know the property really well because before investing, you need to have that final presentation or the webinar to see and to take the decision on that. In terms of the REITs, you don't know what's the property. You don't know how many properties are. You don't know where they are located. So, I mean, that's one of the important differences. Then the investment minimums. So it's very different because in REITs, there's very low minimums, right? So you can invest just even with a couple of $100s. It's very easy to invest. For syndications, it's different. And usually like the minimums, at least what I'm seeing in this moment is 50 to 75,000. And why is that? And the reason is, so one of the reasons is that we want to have, and in general, like syndicators want to have a good communication with their investors. So in these projects, multi-million-dollar projects, we're looking to raise sometimes $5, $10, $20 million. And you can imagine, even with 50,000, with 75,000, there's hundreds of investors. What would happen if it would be less? It would be a nightmare, right? Just to manage all these investors, and no one would be happy with the service that we provide. So that's one of the things. Then the liquidity. Again, REITs work pretty much as stocks. So you can buy and sell. If you change your mind, you can sell that in the next day, in 2 weeks, and that's fine. For syndications, you need to have the mindset that your investment is going to be locked there in the property for the long of the time hold. And these projects usually last for 4 to 6 years. So that's something important that we talk with investors before they go in the project, because again, life happens, right? And things can change. I may need to buy a car next year. I mean, I may have a medical emergency, or my kid may be going to college. So we have this insurance, right? If we're going to need that money, maybe it's not like the best idea to invest in syndication. And finally, tax benefits. REITs, unfortunately, they don't have that because, again, it works more like as a stock, as a mutual fund. In syndications, you get all the benefits from real estate, the same way people who invest in single family houses get. They get in commercial real estate, investing passively, and even more, because in commercial real estate, it makes more sense to do these cost segregation studies, to do the bonus depreciation. And many investors who are new investors, are actually even more for investors who have been investing for a long time, is very beneficial.
Harry, how do you prepare for a downturn? You're looking at a deal now. Obviously, you chose syndication versus REIT, for many reasons that you talked about. But as you're looking at a syndication now, even passive or active, or maybe some ways that we haven't talked about that you like to see, or to personally be prepared for some kind of economic downturn.
Yes. So trying to focus or invest in bigger cities or areas that are actually growing. I try to stay for now away from tertiary markets. And personally, we're having a little bit more of extra cash reserves right now, like in my family. And also that's something that I like to see in projects. I mean, we don't necessarily need to raise much more, but I mean, like to have enough reserves to deal with any problems like that, especially in these moments where, again, we still have a lot of inflation. Still, many of the projects, they are not going to cash flow in the first couple of months just because the rates are so high. So we need to prepare for that.
For sure. No cash, you crash. Right?
Yeah. That's one of the main things of our business.
So what's a way that you've recently improved your business that we could apply to ours?
Yes. So one of the things that, like I always talk with people, is when you're growing, when you're starting a business, probably the enemy of growing or success is one, being in the comfort zone. You are in your job, or you have a company and you're doing well, and you always think, hey, we can continue growing, but we're doing so well in this moment. I mean, why to risk things more? So getting out of your comfort zone, and also fear of failing. That's even worse, not doing things right in that moment. So we're trying to do all these things. I mean, of course, we're doing big steps and taking partnerships with other people who have been experienced in the field, but moving forward.
What's your best source for meeting new investors right now?
Yeah, so so again, as you can imagine, I'm a physician, and my background, and my wife's too, is being doctors. So we are active in social media. So we have our YouTube channel. We are big believers in education, right? One of the things I always say, people usually invest or do things in something that they are familiar with, or there's something that they know. So many people, the only way they know to invest is in stocks and mutual funds, the 401k. And that's why we created this YouTube channel, just to help other people, right? To see that there are other alternative ways of investment. So we have our YouTube channel. We have our website where we also have our blog. We're very active in physician Facebook groups. So yeah, we try to be out there. And I mean, of course, we will love people to invest with us, but more important than that is that I want to give education, and also I want to give other doctors and healthcare professionals options, right, for the future.
What's your best tip for passive investors?
Yeah, so and it was something important when I was starting in this, you need to do your education because it's your hard-earned money. You need to do your education in order to be comfortable taking a new step in doing something new for you, which is investing in real estate. But as important as that is, at some point you need to take action. I mean, education, it can just take you somewhere, but the next step is action.
What's the most important metric you track? Could be personally, professionally, either or anywhere in between.
Time. So it's not a common answer, but yeah, time. So we do all this, what we do really, right? Like we do our W-2, we do business and all of that because we don't want to trade our time for money anymore. So that's what we do, these passive investments. So personally, what we try to do is to have more time for our family, for our friends, for our kids too. So one of these things, so for example, that we have seen and we have witnessed in real estate is my wife, actually, she stepped down from her job last year in November. So, and that was a great thing because that has given her so much time with the kids. They are 7 and 11 and they're doing great in school, but still they need like their mom to do other things and to continue growing. So yeah, time is very important. And actually also this year is the year where we have traveled like the most. I think we have traveled 4 or 5 times already and loving it.
Yeah. Time is, man, it is slip away if you're not tracking it, right? If you don't know where you're putting it, and you definitely don't get those years back with the little ones. I've got 2 young boys as well. So
yeah, they don't get younger.
Yeah, that's right. They don't get younger. You can't go back and spend that precious time with them. So that's very honorable of you all for her to be able to leave her career path, she obviously didn't get there easy, right? You don't become a physician overnight, that's for sure. But no doubt she's heading, doing her calling, right? Or a very important task as mom, to say the least. But Harry, what about some habits that you are disciplined about that have produced the highest return for you?
Yeah, so there are many things that we have done over the years in medicine and now in business. I believe one of the most important traits for anyone is being consistent. So one is that you can have great days, you can have good days, but you're going to have also bad days. And the important thing for anyone for success is to be consistent in that. And the other thing is to be honest and have integrity, because sooner or later, people are going to know about you, how you behave and how you're to people and how are your values, right? Like, so those are 2 very important things that we always keep in mind.
What about, how do you like to give back?
Yeah. So again, as I was telling you, a little bit of education, right, with other people. And again, when I talk with them, as much as we would love them to invest with us, we prefer to give options. When I talk with other doctors and they show some interest for active investing, I'm very happy. And I kind of guide them if they're interested in single family homes or doing other things. And even in multifamily, it's just to give options and to have at the end of the day, another way to build income and wealth for their families.
Harry, it's been a pleasure to meet you and have you on the show, even just going through active versus passive and what you expect to happen next with multifamily and inflation and some of the benefits that also are involved that often people overlook when investing in a syndication or even a REITs versus syndication. Oftentimes there's confusion there, right? I know I talk to passive investors often who are like, well, what's the difference? Why wouldn't I invest in a REIT? And just thinking through those things. So thank you very much for your time today. Tell the listeners how they can get in touch with you and learn more about you.
Yes, thank you so much. Yeah. So we have our website, which is nimaequity.com. It is Nima as in N as in Nancy, IMA, equity.com. And we also have, of course, our YouTube channel for free education from basic things to more elaborated things in real estate, especially in multifamily.
Thank you for being with us again today. I hope that you have learned a lot from the show. Don't forget to like and subscribe. I hope you're telling your friends about the Real Estate Syndication Show and how they can also build wealth in real estate. You can also go to lifebridgecapital.com and start investing today.